Hey everybody, Real Estate Ninja here. I hope you're doing great. Shh, don't tell anybody I'm using the Economic Ninja's garage. Hopefully he doesn't find out. All right, let's talk about a great question I got today on the channel or just the other day on one of the videos. And it was, should we pay for rentals cash? It's a great question. First off, if you're at the point where you can buy your rentals cash, my hats are off. My hat is off to you. But there is some tricky things. So first off, I got to give you a disclaimer. I'm not a financial expert. This is not financial advice. I'm also not a legal expert. So in case you're learning something here, you may want to take this information, actually I highly suggest it, to a tax professional and to a legal professional. But I'm going to tell you about what's worked for me and the way that I look at forming entities and how to protect myself. That is the number one thing. Even though you have the money for residential real estate to pay cash and have it cash flow its maximum, should you do it? So let's break down a couple of things. First off, I've got to talk about your own personal assets, your home, your bank accounts, your stocks, assets, not vehicles. You want to make sure that those are protected, right? Because when you get into the residential real estate game, you are opening yourself up to liability. You honestly open up yourself to liability whether you're walking down the street, walking your dog, going for an airplane ride, or jumping out of an airplane. Why would people do that? Point being is that you're opening yourself up for liability anytime you open up a business or start a real estate venture. All right. So you want to be aware of that. So what I like to suggest is that you take your personal home. If anything, if you have the cash to buy residential real estate, you should definitely own your personal residence or your vacation property cash, as long as it's not opening yourself up to liability, right? You put it into a trust or a legal entity, okay? There's all kinds of different ones. You can contact an attorney that specializes in trusts or legal entities to protect your assets and put those in there, okay? So they can't get attacked by fiery darts from a would-be tenant or somebody that gets hurt on one of your rental properties. All right, so now let's talk about your entity. The reason why, and I see this happen a lot, people start off with residential real estate, they don't even get themselves a separate bank account. It is so vital that at minimum you have your own bank account separated for just your rental property. So let's take a look at this right here. Let's dive in. You got your rental properties, you've bought them, right? And you either pay cash for them or you have debt on them. And I'm going to give you the pros and cons of both. So first off, you definitely want it in an LLC or an entity. And when I say entity, it comes down to the different types of filings, whether you're an LLC filing as an S Corp, if you are a C Corp, or if you're a C filing as an S, or there's other ones. There's charitable remainder trust and all kinds of things, but that's not what this video is about. So you definitely want to have these in an entity, but at minimum, have your own bank account. Your own bank account. This is super important. And the reason why is because when you're buying rental property, you want to be able to enjoy legal tax write-offs. And you do not want to commingle funds from your private life with your business life. When you buy a piece of property to rent out or lease, you now have a full-fledged business. But the problem is most people don't treat it like a full-fledged business. So they don't have their own bank account with their own separate books, keeping these separate, and they don't have a legal entity to protect themselves from financial downfall. All right. So start looking at all of the great write-offs that you are entitled to by managing your own property, or even if you have the property managed by when you go to repair it and things like that. All right. And putting it into an entity and having your own bank account, very important. All right. So now let's talk about paying cash. Here's the problem. Paying cash, the pros is that you get more cash flow. Cash flow is awesome, right? Here's the problem. We're going to have to pull out the red marker for this. You say you own property and all these properties are paid for cash. Well, let's see this little dude right here. He's just hanging out and he's having a great time. And he's having a barbecue, and it was a barbecue that was provided by you. It was built in and it was propane run. And he's flipping his burgers. He turns on his propane and all of a sudden there's a burp in the tank or something goes wrong, some kind of rupture, and an explosion happens. And now he is in trouble. So that's not a brohawk or carrot top. That is a fire. So now he's got himself some burns and he's ticked. So now he's figuring out, who can I go after? Well, it's super easy. First off, he's going to go after the homeowner, the property owner, which is you. Then he's going to go after, obviously, insurance company and all kinds of stuff. He's going to name everybody, right? Probably even the propane bottle company. A good attorney is going to do that. They're going to want to go and grab money. So you got to look at yourself and go, all right, here's the problem. I own all three of these properties cash. Let's say they're in an entity or they're not. Either way, the attorney's going to go, ha ha, this is money, money, money. He's going to literally sing that song. And so he's going to look to attach all of this. So that's the problem. So when you pay cash for property, you have lots of money tied up in these properties, which is bad because an attorney now wants to come and take the value of those properties. All right. Now, let's say you went ahead and put debt on the properties. Okay. That is, I got no money. Because in a proper legal entity, what you're doing is you're taking the cash flow from these properties. And you can put down, don't get me wrong, there's people there's really good ways to do the math on this. And there are people that put down the bare minimum. That's what I like to do when I'm using my own and the property is cash flowing itself. I have emergency savings set aside and all that kind of stuff. But you take that money and it comes out of the entity, right? The LLC or entity, and then the company is paying you because you're managing the company. So you get a paycheck, money. And then you could take that money and you could add it to your trust or entity over here and save it, protect it, right? Or you can go buy other rentals. And what I would suggest is not have one entity for all your properties. That's a decision you and your attorney need to make or your accountant needs to make. And you can put bundles of businesses out there, all right? Now, so the company's paying you. The only thing, and again, you want to go look for legal advice because I'm not a legal advisor. I'm just an investor. The one thing that he could go for is if there's enough value and they think that they have enough money to take the first note away from whoever is holding the mortgage. They really aren't going to do that, so they're going to come after whatever the company pays you, really, and that's a really neat, interesting tango, let's say, that you can play during the legal process. So essentially, that's the way that you want to do it. Now, a lot of people, like they said, they go, but Ninja, what if I've got so much money? All right. Well, if you wanted to have, if it was me, just me, this isn't legal financial advice at all, tax advice. If I had so much money, right? Let's say I buy a property. So let's go over here. I buy me a house and I got tons of money. What I would do, and again, talk to your legal people, but you'd set up an entity, right? An entity. That's what that E is for. And then that entity now rents it to another entity that you started. It's a management company. That's how you spell management. Point being is this, what you're doing is you're putting levels of protection through all of this, and through the proper legal channels, the proper legal documentation, you can ease the amount of liability a property has because this entity is renting it or having this management company, manage the property. And after ways of doing it legally, you could word it to where, and especially through proper leases and things like that, you have less exposure, less vulnerability, right? So that's the thing. Honestly, with me, I wouldn't be paying cash for rentals. I would literally scrub all this. I don't like this idea either. I would literally do another entity, another entity, another entity. You put a nose there, and then this guy's going, oh yeah, we crushed it. Guys, I hope you got something out of this. Again, you have to seek legal help, legal legal advice, tax advice. But if it was me, I would not be paying cash for rentals and letting those rentals sit. The only way I would do it is if honestly I did it and then I borrowed against that debt so that I could use the company's money because the company owns the house, take that money, then go buy more houses in that entity. That's the only way I would ever do it. And even when I'm doing that in that process, I wouldn't have the property rented out. It would be sitting vacant for a handful of months for me to buy the property, put it into the entity, then go borrow against it, use that money to go buy another house and repeat that over and over and over. And what's really nice about that is then the loans are in the company's name because you're going to pay higher rates, but you're going to get worse lending terms, but it's going to have your name out of it. Again, the name of the game when it comes to residential real estate or even commercial real estate leasing and ownership management is about getting your name, your social security number away from that property in case Joe Blow over here lights himself on fire when he's making hot dogs. All right, I hope you guys got something out of this. I better get out of here sooner or the economic ninja is going to kill me. He's having a bad hair day. We're out. Oh, wait, hold on. I was just joking. There's a discount code below for 70% off the real estate crash course if you trust me now.